Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in today's video, I am going to look at one of the best semiconductor companies out there. This is part of the S&P 500. I've done quite a few companies so far. I'm trying to do as many single stock videos as I possibly can, considering we get into that stage where some companies seem very much overvalued. And the company I want to focus on today is a company that I actually have on this portfolio. I'll share with you guys at the end basically how many shares I own or what I'm going to do with this business. But before we get to all of that, just to want to say a couple of things. If you have not subscribed to the channel, please do so. There's a lot of you that watch the videos that have not subscribed. It means the world to me. I can't even talk. Also, it would be absolutely amazing if you could like the videos and join us on the Patreon account if you can. Okay, you get access to all of these things as well as the Discord access that comes with it. So that definitely helps the channel. If you could do that, that would be absolutely amazing. Now, the company we're going to talk about today is Qualcomm. Before we get to anything else, I just want to show you the breakdown of this business. Okay, so Qualcomm Inc. is the company. It has more or less about 3 different sections or segments of their business. Okay, so they got the QCT, which is just the technology side of it. 30.4 billion comes, or 84% or 85% comes from that side of things. The rest basically comes from the QTL, which is the licensing part. And this is why I think this is really one of the best companies out there. Whenever other companies want to use a license from this company, they have to pay royalties to this company, right? And just for this reason, I think this company deserves to be a wide economic moat side of things. But of course, it's not according to Morningstar. But Qualcomm Strategic and Innovations is also QSI, is also just basically 0.1% of the entire business. Now, the revenue in when they finished their financial year for the 2023 was about 35.8 billion US dollars, gross profit about 20 billion dollars, operating income of 7.8 from that, pre-tax income of 7.4, which is about 20%, and they made a net income of 7.2 billion dollars, which is quite nice if you think about. So these are basically their earnings and where the earnings comes from. Let's now have a look at what the company has done since beginning of the year. Now, in 2023, the company was up about 25%. Okay, right now is actually not doing bad either, because in comparison to other semiconductor companies, it actually hasn't done really well. I mean, companies like Nvidia and others have gone up 200%, but even AMD has gone quite a lot because of course all the AI situations that they're in right now. But this one is actually just up 25% for 1 year. I said just it's basically more or less exactly similar to what is the S&P 500 has done. Quickly looking at the financials, so from 2014 it made $26.4 billion to right now $35 billion, which is what we've seen early. So that's actually nice revenue growth if you think about. The net income, again, we're looking about from 7.9 to 5.2 for 5.7, and then 2017 there was a bit of a drop of 2.4. Then it actually lost a bit of money. Then 4.3, 5.1, $9 billion, $12 billion, 12.9, and then 7.2, and that's where we are now. So it actually has a decline little bit in the last just last year. So Qualcomm has a dividend yield of 2.33% right now, 152 billion market cap, so it's actually mega cap, 80% safety in terms of dividends. In terms of payout ratio, we're looking about 37%, which is absolutely fine. Latest increase was 6.7, 5-year growth rate of 5%, and 24 years of 20% of basically 20 years. So it's actually growing. Into 20 years is growing very fast. Right now it's kind of average if you think about. And as you can see here, it's actually beautifully growing that dividend. In terms of the dividend, and increasing that dividend, is about 20 years right now without actually reducing it, which is quite nice. $3.20 is what you will get for every share of this company that you own. These are the months that they pay, and right now looking at this, it looks reasonably valued. So dividend yields more or less exactly where basically the 5-year average has been. So we want this average, basically the current dividend, to be higher than the average for this company to be really undervalued. But when you look at the PE of 15, information technology right now is about 24. So it seems cheap in terms of PE, which is quite nice if you think about it. There's not that many technology companies out there that are in similar sort of situations. Now looking at a couple of more things, let me go straight to shares outstanding. As you can see, it's declining, which is quite nice. So they're buying back their own shares. They're giving you 2% dividend yield, over 2%, and total sales in the last as you can see in the last few years, 2022 was quite nice because I think a lot of it is basically was something to do with the fact that Android mobile phones, as well as the so Samsung, for example, and Apple use products from this company. A lot of their revenue actually comes from that side of mobile side of things, and they were doing really well. 2023 there's a bit of decline, and basically next 12 months they're expecting more or less the earnings to be the sales to be more or less the same. Return on equity. Actually, before I move on from this part, there's one thing I want to mention about this company, and just that's general for the entire semiconductor companies, and that's China. China has now been told you have no access to US made chips because we don't want you to be, competing with us when it comes to technology and advancement and all of that stuff. So what China is doing is now they're giving their own companies, so the state funded companies are now coming up and actually doing more or less similar what these companies are doing. So I wouldn't be surprised in the next 5 to 10 years if China overtakes the US when it comes to chips. The reason I said that is because it's state funded. So the US, the Chinese government is actually giving money to these companies to say, go out and do this. That's why they didn't want ASML, which creates all the heavy machinery that actually that's used to make those chips, basically sold to China. And that's the only thing that's going to stop them. If they can replicate and make some of those heavy machinery themselves, I think they're going to take over from China. But again, that's all speculative. But I do genuinely think in the next 5 to 10 years, some of these companies will see a decline in their revenue because of what China is doing right now. And the fact that they're state funded. That's why the US basically said, we'll give you a new bill of 20 billion or whatever it was. I think the Intel was taking 20 billion from the US government just to build a factory in the US. So I think that's what they're trying to do. Anyway, moving on, return on equity, so 37% right now. Return on invested capital, 23%. Operating margins of 24%, and free cash flow margin of 28%. And net debt to EBITDA right now we're looking at 0.34, which is way below what we expected of 1.5. So in terms of that, absolutely no issues. Now, in terms of growth expectations from basically this year, if we go to analyst here, this is Yahoo Finance, you can see current year about 10%. Next year, they're expecting about 11%, and then 6% after that. So absolutely decent, nothing actually to worry about here in terms of that. Now, a couple of more things I'm going to show you. Fair value from Simply Wall Street is 174. I'm going to show you my own basically valuations for the company in a second. But let's go back to Seeking Alpha. So a couple of more things. Earnings side of things. Let's go to estimates. Okay, so 9.3%, 12.7%, and then 7%. So if we just use the first three, that's nicely growing. So almost a double digits, and then 7.29. Now, in terms of revenue side of things, 37 to 43 in the next 3 years, which is quite nice. So 5% growth, 8% growth, and then 6% growth, which is nice. And what I like to see that. Okay, the fact that companies buying back their own shares, their top line is growing, the revenue is growing. The only thing that's going to be negative on this side of things is if China decides, or if Apple decides to come up with their own chip, or Samsung decides they're not going to use this company's product. And again, this company is diversifying away from mobile phones, and they have been investing heavily on that side. So the Internet of Things and things like that. So we will see where it ends up in the next few years. But if we look at Wall Street analyst expectations for this company, it's about 2% upside from where we are now. $141 per share is where they think the price should be. Now, Now, just to give you a bit more information, the fiscal year 2023 segment results, the QCT was down about 19%. The EBIT was actually down about 38%. So if by looking at this, look, 37.7 in 2022, they made about 30.4 in this section only, 30.4. Now, that's a decline of 19%. Same goes in terms of the revenue side of things. Again, 17% decline in the QTL, 6.4 to 5.3. And that's probably one of the reasons why this company was down about a few months ago. Now, handset side of things, okay, is actually down about 22%. Because of course, a lot of Apple's products weren't actually selling as much, as well as, of course, all the smartphones. I think companies were actually seeing a little bit of a decline in terms of their revenue. So again, there's a bit of a decline there. Automotive is actually up, which is quite nice, about 24%, and Internet of Things was actually down as well. So I'm expecting these basically to rebound in the next few months and see if that happens. Now, Qualcomm, again, is a company that, like I said to you guys, I might be being a little bit biased because I do own this stock in my portfolio. But according to Morningstar, it's $140 per share right now. According to Simply Wall Street, is 174. Discounted cash flow model of basically has given me 184. I think I used the growth rate of about 5%, which is quite low for this company, but it's still. And then multiple valuation is giving me 175. I've compared this company with, I think it was, Texas Instruments, Broadcom, as well as NXP Semiconductor as well. So overall, it has given me average intrinsic value of $164 per share right now. And as you can see, this stock is 137 right now, 19% upside from where we are. Then of course you have to take that into consideration, like anything can happen. So I've given myself an average margin of safety of 10%. That means the price should be about 147. It is a buy according to this model. If you feel like, with the situation in China, things might be actually a little bit more trickier, again, you can go down to 15%. Even as safe as 20%, it will get you almost closer to where the stock is right now. So 137 right now, by price, after taking into consideration margin of safety of 20%, 131. And again, this information comes from different analysts as well as my own basically models. So you're going to have to make sure that you take that into consideration when you're doing this. So if I have said 131, you might want to take off some little bit more. Again, of course, you're doing your own investment. You're going to have to be careful. Just don't take this for what, just take this for what it is, inshallah. But like I was saying earlier, so fair value of 140, and they have given an economic mode of narrow. I think this is going to have to change at some point. I keep saying this because the company has that license part is actually very, very sticky and very important for other companies to actually acquire and pay for that. Anyway, if you like this type of content, please like the video, subscribe to the channel. Let me know if you have any questions. As always, I genuinely appreciate everything you guys have actually done for me. So it will be absolutely wonderful to continue doing this and sharing my journey with you guys day in, day out. So please do like the video, subscribe to the channel. Now, I do own 40 shares of this company, over £4,000 right now. I'm up about £400 right now, 10% up. So what am I going to do moving forward? If it comes back down to maybe 125s, because that's where I am, that my average price, then I will actually load up again. I would not mind adding another 10-15 shares of this company, but right now I don't want to average up, knowing that there are other companies in this portfolio that I'm still down and I still want to add a bit more to it, inshallah. Anyway, that's what I wanted to share with you guys today. If you're enjoying the content, as always, like the videos. Have a wonderful day. Assalamu Alaikum.